Hey friends, welcome back to the channel. And in this video, let's continue our discussion on Peter Lynch's investment strategy. So, researching a stock would be very easy if you know the basic business of the company. So, it would be beneficial to invest in a company like hotel chains versus some kind of semiconductor chip that they're building to boost the performance of AI model. So, this is what we are going to discuss in detail. And what are the different attributes that a perfect company should have whenever you're researching any kind of company. So first is it sounds dull, or it does something dull, disagreeable. So these are the companies like
That's why my favorite store in India is the most uncreative store name. He has earned my respect. This guy, he's so beautiful. No thoughts given. Vijay Sales. He doesn't like two questions. What your name? What you do? It's not Vijay Sells. It's Vijay Sales. He has become event. What a dedication. Other stores sometimes having sales. Vijay Sales. Love it. Zero creativity. बाजू में टाटा क्रोमा में ए के ऊपर दंडी लगा के 15 MBA हायर करके बैठा हुआ है कि थोड़ा देवनागरी फील्स देना है. रिलायंस डिजिटल मोमबत्ती लगा के बैठा हुआ है. विजय सेल्स. लोगो देखो. यू वांट इटैलिक और यू वांट बोल्ड. व्हाई नॉट बोथ? Color black and white. Tagline, Nike has tagline, just do it. Vijay Sells tagline, vijaysells.com.
किसी बनिए से पूछो यार, बनिए करते महीन काम जिस पे किसी दुनिया की नजर जाती नहीं ज्यादा. उसे हम अपनी लैंग्वेज में कहते हैं सूखा काम. जैसे किसी बनिए से पूछो भाई साहब किस चीज का काम है अपना, ही भी लाइक ये जो भाई साहब मेहंदी रचाने का जो तेल आता है ना छोटी छोटी शीशियों में, फैक्ट्री अपनी मुरादनगर में भाई BMW ऑडी बना देता है आदमी. किसी और बनी से पूछो भाई साहब किस चीज का काम है अपना, अरे जो KFC मैकडोनल्ड पिज्जा हट में जो टिश्यू पेपर लग रहे हैं किसकी मैन्युफैक्चरिंग है, गोयल ट्रेडर्स मेरठ वाले. भाई पोर्श बना देगा आदमी. इनके अजीब अजीब से काम होते हैं यार बनियों के. मैंने एक बनिया भाई से पूछा, मैंने कहा भाई किस चीज का काम है, कहता हमें छोटी इलायची के एक्सपोर्टर. बड़े बाजार में छोटी इलायची का काम है अपना.
if you find these kind of companies which have terrific earnings and a strong balance sheet, you have got your potential winners because these are the companies that gives you a lot of time to purchase a stock and at a very good discount, because these are companies that are out of limelight and not many people are talking about that, because of which they are mostly trading at a discounted value. Next is it's a spin-off. Now talking about spin-off of division or part of companies, these are now separate and free standing entities. So normally these spin-offs have strong balance sheets and they are prepared to succeed as independent companies, because large parent companies don't want to spin off some divisions or part of business and then see them get into trouble or going bankrupt, because that would attract a lot of bad or embarrassing publicity. And one thing to note about the spin-offs is the literature that is sent to the shareholders about the spin-offs are often understated and is often misunderstood by the Wall Street experts. And this comes out to be a positive attribute because you can get these at a discount. Also talking about the merger or acquisition, so companies that are target of the hostile takeovers, what they do is to fight or to counter down this hostile takeover, they sell or spin off some divisions that they think can become a separate entity of its own. And when you hear about these kind of spin-offs, you should immediately start your investigation about the stocks. And after a few months, you should see that if there is a heavy insider buying or or the people from the previous company are buying in that company. And if they do, this is just the confirmation that the company is going to do good in the long term. So next is the institutions don't own it, or the analysts don't follow it. And if you find this kind of company, you have got a potential winner, because there are not many buyers about it, and there's not that much discussion about it, and you can get these prices at a fair discount, and you will have a long time to buy these kind of stocks. And these things happen quite often with banks or insurance companies or loan companies, because there are a ton of these companies in the market, and Wall Street could only talk about a handful of these companies. The next is investing in a no growth industry. So most of the investors, what they do is they invest in high growth industries, where there's a lot of sound and fury and limelight. And when you invest in high growth industry, there would be a ton of competition. So finding a stock that could beat all the competition and come up with the most market share is very difficult. So take example of the AI thing that is going on recently. So we'll see that there is tremendous competition amongst different companies, be it Google, ChatGPT, and there's new players in the market like the DeepSeek and all, which are there to provide better services at a cheaper cost. So there's always going to be a very high competition, neck to neck competition, and you won't see that much bargain in the prices of these kind of stocks. Rather, you should be looking at industry which is deemed as no growth, because you won't have that much competition, and you can buy the stock at a fairly discounted value, because no one is interested in that. The next point is that the company that you're researching is in some kind of niche. So so once you have got an exclusive franchisee in anything, you can raise the prices of anything. And this you can see in companies like drug companies or the chemical companies, which have niche products that no one else is allowed to make. So talking about the chemical companies, you these companies have niches in pesticides or herbicides. So taking up a patent in these kind of products, it would be very difficult for the competitors to build a the same product, solving the same problem, and attaining a patent related to that. So these companies can have a monopoly, and hence can increase the prices and can skyrocket their stocks growth. So similarly, we can have example like Coca-Cola, which is as good as niche, because it costs a fortune to develop a public confidence in a soft drink. Another example would be a drug company, which has some kind of medicine in which they have taken a patent. So all these kind of companies have niches, and it would be very difficult for the competitors to compete in that particular sector, and they could easily have a monopoly in that. The next is the companies that build products that people have to keep buying. If we talk about some companies that build toys, and if we talk about from the perspective of consumer, how many of toys they could buy. So they could buy one, and there would be some competitor again having a better toy waiting for them. Now companies like drugs, soft drinks, razor blades, cigarettes. So these are the products that people are going to buy again and again, and of a specific company. So Coca-Cola, as I had discussed, would fall into this category, because people will be keep buying it, and they have developed a taste in the soft drink. And the same as with the razor blades or cigarettes. Next point is that the company that you're researching is the user of technology. So like I have taken an example of this AI thing. So if you are not investing directly into AI, you are not investing directly into companies like ChatGPT. But what you are doing is you are investing in companies that benefit from these kind of high growth industries. Take example of Nvidia, which manufactures the hardware that is mostly or widely used in these kind of AI companies. And you might have seen that then the stock growth of Nvidia that has been going insane. So the next point to consider when you're researching a stock, that would be to see if in a company the insiders are buying it or not. So there's been two signals for that. First is, in the near term, you can be confident enough that the company is not going out of business. And the long term, if you see that the management is owning the stock of the company, so the first priority is going to reward the shareholders, and you can get this information publicly easily, because whenever this kind of insider purchase happen, it has to be declared. So you can find it in newspapers or some newsletters or the Wall Street journals or some kind of brokers. And talking about insider selling, it is not a red flag, because there are several reasons why insiders are selling their shares. Maybe they are planning to buy a home or some kind of big expense. So insider selling is not a red flag, but insider buying is truly a green flag that you should not ignore. And in the end, the point to consider is if the company is buying back shares. Now, this is the best way to reward its investors. And what does it means to buy back share is, let's say there are 1,000 shares of company in circulation in the stock market, but now when the company buy back shares, let's say 500, now the shares that are in public are now 500, which is half of the shares that as compared to the beginning. And it is going to have a positive impact because earnings per share has now just doubled. And in the long term, if we see, it is always going to do good to the stock price as well. And the alternatives to buy back shares is going to be raising dividends or developing new products or starting new operations or making acquisitions. So either the company is buying back shares or they are investing in some businesses that could grow its earnings. Now, the reverse of buying back shares is adding more shares, which is also known as diluting. And most of the companies do this just to stay away from bankruptcy and to raise capital from external investors. And diluting is not a positive sign, and it can be a negative in fact, because you can see that company don't have enough resources to expand its growth or even to to continue its business operations. So it would be better if you start looking at other investing opportunities. So these are the few attributes that a perfect company can have and that you should look out when you are researching any stock. So that's it for today's video. See you in the next one.